Good afternoon, fellow Rotarians and guests. It's good to have you here at the Cade Museum joining us for our meeting today. Please remember to silence your cell phone, and if you're watching on YouTube, please register your participation by sending an email to info@rotarygainesville.org. And now for our song and pledge, please welcome Pete Enwall to the podium.
Thank you very much. Thank you very much. A farmer, as you all know, yesterday was tax day, and I hope everybody got your extensions filed in time. A farmer took his tax stuff to his accountant last week, and the accountant said, "Well, come back tomorrow, and I'll show you preliminary, and then we can talk about it." So he came back, and the accountant said, "Well, you made so much money last year, you're going to have to pay estimated taxes this year." The farmer said, "What is that?" He said, "Well, you got to figure out what you're going to make this year and pay the tax in installments over the course of the year." And the farmer said, "What?" And the accountant said, "Yeah, you need to do it because they'll, penalize you. You have to pay penalty and an interest charge." So he gave him the form. The farmer went home and brought it back the next day, and the accountant looked at it. Said, "Well, you did a good job estimating your income, I think, but you didn't put your name and address on the form." And the farmer said, "Well, IRS is smart enough to figure out that I know what my income's going to be next year, so let them be smart enough to figure out who the heck I am." We're going to sing. We missed it this year. We're going to sing "Take Me Out to the Ball Game." Take me out to the ball game. Take me out to the crowd. Buy me some peanuts and Cracker Jacks. I don't care if I never come back, 'cause it's root for the home team. If they don't win, it's a shame, 'cause it's 1, 2, 3 strikes, they're out at the old ball game. The man giving the prayer today played baseball for the Florida Gators, so we'll look forward to his prayer. Would you join me in pledging allegiance to the flag? I pledge allegiance to the flag of the United States of America and to the republic for which stands one nation, under God, indivisible, with liberty and justice for all.
Thank you, Pete. And now for our invocation, Lori Vidal.
I want you to know that I just invited Pete Enwall to go to the baseball game tonight with me. And you know what he said to me? He said, "I would." He said, "Thank you for the offer, but I hate baseball." Could you believe? So as we pray, let's pray for Peter. But wasn't that gracious of him to do that, though? It really, really was. So thank you, Pete, wherever you are. And okay, well, let's pray. We thank you for the words of one who was wise, who made the comment, always be ready to give an account for the reason of the hope that you have. And so as we gather together, we want to give an accounting of our lives, of the things that we are involved in. Are they things that are true? Are they things that are fair? Are they things that are beneficial to all concerned? Are they things that are building good work, good and better friendships? And so we thank you that we are gathered with a sense of purpose and accounting, being accountable to others. And so as we gather, we ask you to challenge our thinking and the way we're living. And we thank you that we have the opportunity in the future to give an account of our lives to the one who gives us life. And I pray in his name, amen.
Thank you, Lori. You may be seated. If you are a guest or visiting Rotarians, please remain standing. We'll have the microphone be brought around.
That didn't take long.
Good afternoon, Rotarians. My name is Craig Carter, and this is my guest, Caleb Kenyon. He's a local attorney here in town and an old friend.
Welcome. And I think that's it. And I think for the first time since I've been at the podium this year during this segment, we have no announcements. So with that being said, there's a first for everything as we wrap up the year. With that being said, please help me welcome our president, Linda Reinhardt, to the podium.
And carrying on that tradition, I don't have anything additional to add to today. So welcome. It's a light crowd today. How is everybody doing? I'm gonna just go ahead and we're just gonna keep on rolling here. I guess no news is good news. Things are going really well. So I'm gonna go ahead and just bring up Lisa to introduce our speaker today.
Wow, that was quick. I wasn't prepared for that. So today we have a speaker, Michael Solomon, a dear friend. And for some of us, tax time means reaching out to your accountant, finding one, deciding to do your own taxes, but no matter what, it's stressful. So while some of us, our tax season's over, some of us, our tax season's still going, and for some of us, our tax season never seems to end. What should you expect or think when you hear the word accountant? So today we're going to introduce Mr. Michael Solomon, the lead accountant for Accounting Personalized, and he's going to give us some insights into the very confusing world of accounting. Please welcome Michael.
All right, so you guys are going to have to forgive me. It has been a long tax season that just ended yesterday, so I am both caffeinated and exhausted at the same time. I promise by the end of this, you guys are going to be tired of the word accountant or accounting. But I'm going to talk a little bit about kind of my practice and my firm and kind of where we see accounting today, because it is changing quite rapidly. Do we have the PowerPoint? Sorry. Just to keep me on track here. So as many of you I'm sure are aware, thank you very much, sir. AI has become more and more prevalent in today's news, in today's world, and things that you're doing. Intuit, one of the largest accounting firms out there that produces software that owns TurboTax, it owns ProSeries, ProConnect, QuickBooks, has invested hundreds of millions of dollars over the past 2 years trying to implement that. You can now, as a modern person, just take a picture of your W-2 and it actually inputs it everywhere on the tax return for you. Forbes, Wall Street Journal, New York Times are all saying that my industry in the next 10 years is going to probably be a twinkle in my eyes. So what is accounting? I guess let's start there, and then we're going to go back to kind of everything. So we're just going to talk a little bit about accounting, what's staying the same, what's changing, how we're trying to add value and what we're doing differently, and then ultimately how we see accounting firms, actually not even our own, other accounting firms, trying to change and adapt with what's going on and how to actually serve our customers and clients better. So I have to make a joke here because I did send this to get proofread by my staff, and they are all on vacation while I'm working today. So I'm using one of them as a prop here. This is Mary. She's my senior bookkeeper. Certainly doesn't look like your normal accountant. You think nerds with glasses, maybe some pocket protectors. No offense to anybody that has one of those. But when you think of accounting, normally we hear, ew, gross. Oh, I don't want to deal with it. People get really stressed out. When folks come to our office, the first thing we notice is their shoulders are hunched forward. They're kind of got this little low look to them. And we've got to kind of overcome that. Accounting is just a numerical, historical perspective of what you have done. That's it. That's all we're doing, is we're taking basically recording what you have done in the past in a numerical perspective and reporting that either to your bank, to the IRS, whoever you need to report. We also do decision making based on those reportings. So in accounting, we are also known as people that are, if you're a Lord of the Rings fan, Hobbit, right? We stay in our little Hobbit holes for most of the year. We don't really like coming out. As you can probably hear from the tone in my voice, it's not perfectly smooth because I'm standing in front of a bunch of people. This is not a normal for an accountant. But where we have been lacking in our industry really is approachability. Normally folks don't say, hey, I want to go hang out with my accountant today. I don't think, I've never heard that. Thank you for the laughs in the back. I'm trying my best with some of these jokes. But what we're trying to do is curb that. My firm has been in existence now for 5 years. This will be 20 years for me in May doing this. And we take an approach in such a way that when a client comes in or somebody comes in, we're actually looking at them now as a person. We're trying to be approachable. How are the kids? How's whatever hobby that you're doing? We're making notes internally. We're trying to remember who you are, not your social security number, not your income level per se. We're trying to say, hey, this is a person. This is what they're doing, and trying to have a better understanding of what your goals are. Certainly, we are not financial advisors. We are not bankers. We are not going to be, as I refer in my office, our crystal ball ran out of batteries many, many decades ago. We don't do that. What we do, however, is listen to you, take the numbers that we have, and we say, okay, I hear what you're saying. How can we get you to your goal? Whether that's retirement, whether that's, hey, I want to save for my 401k, whether that's, hey, I sell real estate, what's the new tax deductions? Are we doing 1031 exchanges? What's the best way for me to move around? Maybe I want to do rentals. Hey, I have this really good business idea. Is it worth it? And this is where I'm going to kind of stay here for a second. So when we're talking to folks, as many of you, you are the professional in your field. And some folks take that for granted. People are coming to see you because they're looking for your advisement. And in accounting, we have been lacking. And I'll be the first to admit that I've been lacking in my career in that, where a client comes and they're asking us for advisement and we're not seeing it quickly enough. That's where the AI is never really going to be able to fully integrate. It's going to get really, really good. And I'm excited to see the changes that are going to occur. But it's not going to really understand you as a human, as a person that says, hey, I really like this side hobby of, I was just speaking with one of your fellow Rotary members of like hobby farms. How do you determine, is this really a hobby? How do you really determine, is this a viable business? Well, if you plug it all into an AI system, it's not really going to understand that. It's going to say, well, are you making a profit? That's how it's ones and zeros. It's not looking at, can this be a business? Is it a viable option for you? What is your goal? And can we advise you, this is working, this is not working, from other clients that we've interacted with, other businesses that we've interacted with? When you're small, especially as a self-employed individual, you're scared. And we see that fear every day because you don't know things, right? You don't know, where's my next paycheck coming from really? What does the next 6 months look like? What does the next 5 years look like? It's very different for you. So when you take that plunge, you're looking for that team surrounding you. I know we were talking about baseball, but I'll give the football reference. So you're really building your team. You're the coach, right? We are certainly not the quarterback. We refer to those folks as financial advisors. But on a good day, I get to be the running back. I get to call out different things on the field. And our goal every day is to be as good as the Gator football team. We won't mention how easy or hard that is for us right now. Thank you. I got a couple laughs on that one as well. So I'm trying really here. But what we're seeing really is we want that interaction. Okay, so one question we ask every client that comes through the door is, where are we trying to go? What is your ultimate goal? And if you don't know what that ultimate goal is, then we start kind of backtracking. Where are we today? And are you happy with where you are today? If you're just a W-2 employee, and there's nothing wrong with that, If you're a W-2 employee and you're saving for retirement, you're perfectly happy, you just want a tax return done, we can do that. But TurboTax can also do that. H&R Block can also do that. What we differ, and what we're seeing accounting firms, not just our own, but a lot of other accounting firms change to, is the planning aspect, the tax planning. The joke about the estimated payments, although that, little sore subject there. But on the estimated payments, do we need to do them? Is this a good year? Are we talking to the client more than just in tax season? How accessible are we to that person? Can they just call us and say, hey, do I need to buy this tractor? Do I need to buy this piece of equipment? Is it really going to be helpful to my business? Am I going to recoup that? Some of the bankers here, I'm sure, will note that sometimes they don't like us accountants because our goal, if the client doesn't tell us, is to basically make it so they don't have to pay as much. Well, the negative with that is if we're trying to finance a property, or we need to refinance some debt, or we need to even just go buy a truck, if the income's not there, they're not going to give you the money. So it's all just a balancing act of where are we trying to go to, what are we trying to do, and how do we assess that viability in your life of do we need to get you with a financial advisor? Are you in a good place right now? Are we just like tailoring and trying to smooth the rocks as it is? Again, just given that football reference, if you give us the ball, we're just going to run it, right? If you say, hey, come do a tax return for me, I'm just going to run and say, yeah, I got the tax return. It's all good. I'm sorry we owe money. Please don't hit me. But on the other side of that is, can we do this better next year? Or can we do it better over the next 2 years or the next 10 years? And that's really what change we're trying to interact and change that we're seeing just nationwide. Give you a little bit of makeup of our firm. So we closed the season expecting about 3,600 clients. We are a firm of 4. And 60% of our clients are not in the state of Florida. They work with us virtually every year. Now that's because virtual is getting easier for us. It's also because they have multiple locations. So their main home office may be in Seattle, and they want to start doing business in Florida, but they need, they know what their business in Seattle is doing, so they're going to give us the whole football to say, hey, we're trying to open up a little bit more in Florida. We want a satellite office there, or we want a satellite office in Georgia, and they'll give us the football to say, hey, what do we need to be doing? What taxes do I need to be aware of? E-commerce has been tremendous over the last few decades. Last 5 years, I think I've seen more startups just in like online e-commerce business. But what people don't know is that if you're going to try to do it on your own, let's say you make $10,000 in sales to New York City, there are 7 taxes that you have to pay between here and there just to sell in New York City if you sell $10,000. Because you got your locality tax, state tax, city tax, you got sales tax on that, you got your transport tax, and then we've got income tax that we now have to file depending upon your corporate structure. So it's not just understanding where are we at today, it's where we're trying to get to. And that difference is trying to understand and build a better relationship with our clients. So one thing, again, as accountants, we are a little dull, myself included in that. Last year we started this phrasing, and my wife does say that I have dad jokes for days, that we are invested in you. That has been our stance now for the last 5 years. We really took it to heart last year trying to make it. So I wear a vest now anytime I come out Lisa's going to start laughing at me here, as a statement of we are invested in you. So what does that really mean? Yeah. There we go. So we are invested in you. So what does that really mean? That means we are going to take the time, and we are a profession of time. There's no product that we're actually supplying you. So we're going to take the time and we're going to allocate that time to understand, again, you or your business, whatever that is. So from an accounting standard, we don't see a lot of changes upcoming in 2025. We do see a potential whole new tax code that may be put in place depending upon elections and all that things. We won't go into the political nature of that, but We are expecting some changes, nothing major at the moment, again, depending upon what the election holds. But the status of an accountant is going to be changing. Again, we were ranked the #1 industry most likely to be changed by incoming AI. So we're going to be more of relationship managers is how we're trying to pivot our industry, which is that AI is going to come in no matter what. There's no stopping it. But you don't really need or want me to just plug in numbers for you. You're looking for what is the meaning behind those numbers. You're looking for somebody to explain, great, I owe $1,000 to the IRS or whatever it is, but why? Can you explain to me why? Maybe I get $1,000 back. Great. Is there something I can do better so that I can be at 0? That's always our goal. I don't want to give a loan to somebody. I don't want to owe somebody anything unless I understand that that's coming. So the goal is to become that relationship manager for you and say, this is what the tax code is saying, this is how we position you, and this is how we see you going forward based on these changes. We are seeing accountants that are not willing to make this change. Just in the last year, we have lost 5 accounting firms within 60 miles of here that we directly competed with. Not because they were doing a bad job or anything like that. Some of them were just aging out. Our profession is getting older and there's not a lot of new folks coming in. But we are seeing that they don't want to make that change. And it's very hard to compete with TurboTax. That's $75, versus, hey, I've got to charge you $150 or $300 for the same return. It's not a comparable anymore. So where is that value being added? And that value add that we see is that relationship and that understanding of how do we take you from the point A to point B. So that's basically what I've got. Any questions for me? Yes, sir.
I'm going to use terms that imply I know what I'm speaking about, but I don't. In AI, the fate of code writers is in question because AI can write its own code. Can you relate that to the effect of AI in the accounting world?
So are you asking if AI can come up with like its own strategies and stuff like that? So AI, we have tested around with some of that. We actually have tested with some and had some interns from UF that have already been trained in some of the AI. It is very good with strategy. The problem is it can't identify future strategies. So it only looks at strategies to current date. So what that means is, at least at the current level of AI, is that it will look at the current tax code and make a postulate, if you will, on where your current situation would be if that current tax code continued. In accounting, our mistress is called Sally, same as last year, okay? My wife hates it when I say I have a mistress, but as same as last year, that works, right? So AI can mimic that. That's not what most folks need because this past year, as a good case point, the standard deduction increased more than it ever has in the history of the standard deduction increasing because of inflation. AI never would have predicted that. We knew that change was going to happen 7 or 8 months prior to the change actually occurring. So the AI itself has to somehow be put in tune with that to make that estimate or that guess. So at this junction, it's not able to do it. Not saying that it won't be able to do that in the future, but it is kind of limited for that projection. Yes, sir. Any other questions?
Thank God you are one of them. I'm not a math person, so thank you. Good presentation. So I'm into nonprofit, okay? So there was this idea that if people donate, they get tax deductible. Can you elaborate more? It's getting difficult. If I'm not mistaken, I think it used to be 6,000. It might have gone, I could be wrong, to around 12,000 in order to have a significant write-off. How did that affect, I mean, people like me and also the giving level? And yeah.
Excellent question. So the standard deduction right now is tremendously high. For most nonprofits, the majority of your funds come from folks that are over the age of 55, that are cash contributions. Just as a volume, if you're looking for single donors that are donating larger funds, well, the standard deduction for those folks as married filing jointly is $30,700 right now. Okay, so it's very difficult to get those funds. Where we're seeing and where we're doing a lot of work, both for nonprofits and for folks that are trying to get that deduction, is there's qualified charitable funds, like at Charles Schwab, TD Ameritrade. I guess those are both kind of the same now, but at various institutions where they can donate, let's say, they can put $50,000 into that fund in a given year, get that charitable deduction that year, and then it gets slowly trickled out at their discretion. We are also seeing from a strategy and planning perspective where we call skip years. So for large donors, what they'll do is they'll do a large donation in 1 year that basically covers 2 years. So we get that charitable contribution, then they don't donate anything the next year, and then the following year they donate again. It has caused a lot of stress for folks such as yourself that run nonprofits, because budgeting is obviously much more of a factor. And then if you're a nonprofit that has grants and is required to be audited, a lot of those grants like to see that you're using all of those funds. So if we are on a skip year and we've got somebody that gave us $40,000 and next year we know we're not getting anything, budgeting is quite tight, So then we get into allocated versus unallocated. But there are strategies that we do use to combat that. Just in the current case, though, standard deduction is so high. I think the IRS said that 97% of folks are on a standard deduction at this junction.
I just want to first thank you for your sense of humor. And accountants do have them. People don't like to hang out with lawyers any more than they do accountants, I'm sure, right, Pete? My question, though, is for a nonprofit organization like I happen to head the Matheson History Museum here, what do you feel is a sufficient level of internal controls to ensure that the money that's brought in is properly accounted for and spent properly and not absconded with and so forth?
Oh, you're going to put my feet to the fire on that one. So when we start talking about internal controls, it's very subjective. Okay, so every accountant, we're just like lawyers. They're going to have their opinion. Generally, we go by the size of the organization, right, and where the funds are coming from. So if you're grant-based, for each bank account that you have a grant for, or that the grants go into, we like 3 people to have overwatch. So one person to write checks, one person to approve the check, and then one person that does the reconciliation for each one of those accounts. So that's normally our minimum. If we, from an outsource perspective, so when we see clients that are nonprofits that have their bookkeeping outsourced, generally then it's a 2-factor. So we've got whoever writes the checks, and then your CEO or executive that signs them, and then you have within a 15-day period of time, the reconciliation occur. So that way, if anything is not copacetic, it gets caught pretty quickly. Does that answer your question, sir?
Thank you for your presentation and your jokes and your humor. You mentioned that you don't expect much of a change to the tax code this year. Do you have any idea as to different scenarios? In other words, if the no new taxes folks win, then obviously there won't be much of a change. If the need more taxes folks were to win, there might be more of a change. Do you have any idea as to what that might entail?
Yeah, so I'm going to try to avoid a political argument here just because I'm on a recorded camera. But although, you know, YouTube sensation could be good. I'm April 16th. I don't know what I have to do tomorrow. So there's a lot of proposed changes at the moment that are all going to likely come into play in 2025, which would be at the end of 2025 when they actually get implemented. The two main camps are keep it the same, and the other camp is going to be change it and revert back to a similar code to the old tax code. The positive of the current tax code is that most individuals that are your wage-based filer get to file very easily. It's almost like a postcard, right? I just put in my W-2 information, maybe a little bit of stock and dividend information, and I'm done. I file my tax return and I'm good to go. If it goes back to the old tax code, it's going to be a little bit more complicated, right? Because now we're going to take things into account like state income tax, your property taxes are going to be much more in line, mortgage interest. Now that does have a positive to it. It's not all negative. It does have a positive, which is it's going to try to, if they implement that, it's to try to boost the economy, right? That was why that original code was put into place, was we want to promote more people buying homes, right? The contra to that really is that tax code favors states that have income tax. So your New Yorks, your Californias of the world that are heavy, you know, in state income tax, that's what that tax code is going to really be written for, are individuals and residents of those states. And the main reason for that is because those states are charging 7% income tax, and they're getting capped currently at $10,000. So if you were, as an example, we have a couple clients in New York City. Even if you don't own a property in New York City and you make $45,000, we're hitting the cap for a single filer from a deduction standpoint. So they may spend, you know, $20,000 or $30,000 in state income tax, maybe some property tax, all that other stuff in there, and they're limited to $10,000 on a federal tax return. So they don't even get to itemize if that's all that they had. So that's where that tax code is going to be trying to change. The negative for us Florida residents is obviously if they change that tax code, they want that median number, right? They still only want to give you the standard deduction of $12,700. So as a non-income tax state, we would be on the lower end of that median. So we would probably end up being a little bit worse than a normal, like if you were just a normal W-2, that tax code would likely not favor you quite as much just because we were in a non-income tax state.
Thank you for the presentation. My question is, what do you think of the IRS? No, I'm just kidding.
I love them. They keep me employed.
Have you seen an uptick in audits, or what do you see happening here in the future?
Yeah, so the IRS has come out pretty much and all but said vocally that if you are self-employed, you are going to get an audit every one out of every 4 to 5 years. Their old goal was to kind of try to see outside of a normal standard deviation. They still are looking at that normal standard deviation. I'm sure a lot of folks have seen, hey, they hired 89,000 new IRS agents. That's not 100% true. A lot of them are code writers. The IRS computer system is very, very old. We used to say they're jokes that they were processing them in the old filament, you know, and trying to process what we were sending them, which is why the refunds took so long. But they're still doing your normal paper audits, right? That's all it is. It's at the moment they're developing their own kind of pseudo AI of sorts, where the code writers are basically trying to find standard deviations, large changes. It automatically spits out a letter for you. So in the state of Florida, we get our letters from Texas most of the time, and they send you a letter that says, hey, can you give us more information on X, Y, and Z? A person has not even looked at it yet. It is just an automatic letter that gets sent to you. You send that information back. Somebody sits at the computer, enters in your response. A team looks at it, and then you're done in most circumstances. Really, when COVID kind of started, obviously everybody points to COVID, but when they were sending out all that stimulus, they noticed that they got a lot of tax returns, not necessarily from folks that were fraudulent, that did occur, but they were getting a lot of tax returns from people that had never filed before. Because in order to get the stimulus, you had to file a tax return. Well, that notified them, hey, there are a lot of these small businesses out there that aren't filing tax returns because they're mainly on the cash basis, all that other stuff. So at the moment, Venmo's been and Cash App have been front and center because they were supposed to send out 1099s now. We're 2 years past that deadline. They keep kicking the can. So you make more than $600, Venmo or Cash App is going to report that to the IRS. So the IRS looks into you. That's all coming. It's all pretty much already here. At the moment, audits are not as scary as what they used to be. I mean, it's not men in black coming to the door. They do look like they hire football players from the IRS. If you've ever seen somebody of the actual agent, the special agents, they're big boys when they come in. But they, their goal really is just to information. It's just an information grab. They need more data, more data. So right now it's just paper audits. We are seeing an uptick. I think year over year, last year they said about 7% more audits than the prior year. So that's quite a bit. Now the audit turnaround time is very slow. So they're normally trying to window at 90 days. I think we did 14 or 15 audits last year. I don't remember one of them being under 6 months. Any other questions? I appreciate it.
Thank you, Michael, for being here today. In recognition of you speaking, we are going to make a donation to the Bread of the Mighty in your name. So thank you very much for being here today. All right, before we do our normal closing stuff, there is somebody very important that I'd like to take a moment to recognize, and that's Kaylee Jones with the CADE. Kaylee has been our event coordinator, our right-hand person, and today is her last day with us before she moves on to greener pasture. So be sure to take the opportunity to wish her well as she's moving on to bigger and better things. But she has been instrumental in our meetings here at the CADE, and I just wanted to say thank you for everything that she's done. And it's really bright up here when the sun's shining. Okay, so next week we have Brian Pope from the Luby Bat Conservatory to talk to us about their programs out there. For the quote of the day, intaxication, that nice feeling you get when you receive a tax refund until you realize that it was your own money in the first place. So. The quote of the, that was the quote of the day. Sorry, there's, I was going to do it again. The Rotary Reading Safari number for today is 402. 402. We've got a winner in the back. And we have a few extra minutes, so feel free to hang out and socialize for a little bit. But with that, our meeting is adjourned.
It's adjourned.